Hello everyone and welcome to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec on Tuesday the 3rd of September. What we have at the moment is sterling under pressure. Basically what we're seeing is today the UK Parliament returns from its summer recess, and talk in recent weeks has all been how quickly the Parliament could move against Boris Johnson, the nascent Prime Minister, and to try to prevent a fallout of the EU on a no-deal basis. Now, the Parliament is going to move to legislate today, and if that legislation gets voted through, then that no-deal would conceivably be prevented. However, Boris Johnson would then be expected to try and dissolve Parliament and try to engage into a general election. Now, that is not confirmed by any means, and it would involve Parliament voting for a general election by two-thirds basis, but still that would be the possible reaction there. So subsequently what we're seeing is sterling under pressure today, falling away. It was below 120 big figure earlier. It was just unwound a little bit in the last few minutes, but still it is under significant pressure at multi-year lows, lowest since January 2017, at which point it hit 1980, and that is the low that actually on an intraday basis today has been breached, but back above it again at the moment. But generally speaking, we're seeing a continuation of the risk appetite aversion, that we see Japanese yen performing well. We see gold, which is actually holding ground as the dollar has been relatively outperforming, but you also see euro lower. Across the board you see equity markets under pressure, as the S&P 500 futures have been dropping away again. It's interesting that we see FTSE 100 outperforming. That performance of FTSE 100 is due to the fact that sterling is weaker, and you get the negative correlation play, so that is again a reflection of that. But generally speaking, we see treasury yields which are slipping back on the 10 years and the 2 years. We see the VIX volatility, which has jumped up at the open as that continuation of the risk aversion comes through. Interesting that the dollar has broken out in the last few days to highs not seen since 2017. So there is a continuation of that dollar bull run, but I think it's still going to continue to be a bit of a choppy move, and this current acceleration higher unlikely to continue too much further, I think, before some sort of a pullback. But yes, this is just an ongoing theme of risk aversion, where equity markets sort of fail to really get the bulls in charge. We see the gold outperforming, we see yen outperforming, and bond yields subdued. So in terms of data points today, well, we've had Labor Day yesterday in the States, so US markets were shut, and therefore we see the US manufacturing, ISM manufacturing, which is delayed until today, being the main focus. But prior to that, we've got UK construction PMI. Now we continue to see manufacturing PMIs under pressure, and UK construction doesn't look much better, does it? Expected to be 45.9. ISM manufacturing for the US is expected to be there or thereabouts where it was last month at 51.1. So any disappointment there would be putting pressure back on the dollar to the downside, and that will be the key focus this afternoon. Now, my chart today is euro yen. Now, what we've seen is consistent weakness in euro yen, where lower highs, lower lows, downtrends, and we've seen a new downtrend accelerating lower in the last month or so, where we've seen lower highs, lower lows, breaching of support, old support becomes a basis of resistance, falling away. We can see the 21-day moving average as a basis of resistance again. That's at 1788 at the moment. You see this downtrend forming. We see momentum indicators taking more of a negative configuration once more. RSI back under 30, MACD lines crossing lower, stochastics crossing lower, the market breaking underneath 1650, that old support from last week. Had been a basis of support today, so that's been breached on a closing basis yesterday and continues today. That old support becomes new resistance today as well, being today's high. And to be honest, the market is now at levels not seen since again April 2015, where the market hit a low of 114.80, and that is certainly where the market is seemingly on course towards testing. And I think that downside just seems to continue. The yen outperformance is strong, and I think that is going to continue to be the play that you make, I think, on euro yen and across forex majors, where the yen outperformance is the dominant feature of the forex major pairs and major crosses. So we continue to see that being the play. So with that in mind, I wish you good luck in your trading. Click here to subscribe to our videos, and also go to our website where you can sign up for our webinars. Thank you.